A big week for IPOs. Here's a look at what happened in the primary market today. RR Cable made a decent listing with gains of 14%. The issue, priced at 1,035 rupees, opened at 1,180 rupees and rose to its high of 1,213 rupees. This was the first IPO to be listed on the new T+2 timeline. That's just 3 days from the close of the issue. The company raised 1,964 crore rupees from the IPO and will use the money to repay a part of its debt and for expansion plans. The Yatra online IPO was subscribed 161% as it closed today with a price bank of 135 to 142 rupees per share. The travel services company is raising 775 crore rupees. Anchor investors had already invested about 350 crore ahead of the IPO. Yatra, the company, intends to use the net proceeds to fund strategic investments and acquisitions. Sai Silk IPO opened today has been subscribed just 7%. The price bank for the IPO is 210 to 222 rupees per share, with the total fresh issuance worth 600 crore rupees. A similar amount is being offered under the OFS category. Crude oil prices could create some serious problems for policymakers in the coming days. Though prices dipped today, they're still at their 10-month high after hitting those levels on Tuesday. Both Saudi Arabia and Russia have announced production cuts, and OPEC has warned that demand will be much higher than supplies by the end of the year. Brent hit a high of $94.34 a barrel before moderating by around 60 cents in trade today. High prices could pose a challenge to the government ahead of assembly polls in the next few months. Prices have not been changed for the past 15 months, despite crude touching a low of $72 in the summer. Business Today TV managing editor Siddharth Zarabi spoke to a panel of experts on the rising prices and their impact. Listen in.
The current trend that we are seeing, and while there are certain experts who say that, well, it may not touch $100 to the barrel or more in the near future, there are others who say that that is going to be something that is inevitable. What's your own view about crude oil prices at this point of time, sir?
It is extremely difficult to estimate what the price is going to be, or forecast is anyway, largely because it is not something that is determined largely by market forces. It is determined by monopolist producers, and how they would behave, what would be their concerns will be, is difficult to predict. Though I do feel that it cannot go too far beyond 100, simply because in a slightly longer term perspective, the higher the price goes, the faster the penetration of electric vehicles would be into the systems, and the demand for oil will come down. So from a long-term point of view, they will lose money, but maybe in a short term, they might gain some gains. So I think they need to balance this. My guess is it will go up a little bit. The government should perhaps moderate inflation, but not completely, and do it partly.
Look at it from January to September and cancel out everything else. It is a good increase, almost above 15-16%. Mr. Taneja, how serious is this as a concern for the Indian economy?
Well, when crude oil prices go up, it's always a concern for big importers and, energy deficit economies like ours. But looking at your chart and looking at the reality, I mean, the recent rise in crude oil prices have actually nothing to do with either economic fundamentals or demand and supply fundamentals, which always play the most important role. Or I don't actually see even major geopolitical trigger, which again always play a very important role in terms of which direction the prices are likely to go. So there is no demand supply issue, there is no geopolitical issue, but still the prices are going up. The question is that why? And the reason is simple, is that major producers like Saudi Arabia and Kuwait and Iraq, together with Russia and other friends, the so-called OPEC Plus, they have decided that oil prices should go up. And they say, mainly Saudi Arabia, they say they want higher oil prices because they need more money. They are building infrastructure. They are going for, massive, modernization of economy, etc. So therefore, they need more money. And Russia for other reasons, but Iraq and Kuwait, they have got similar reasons. Now, so what they have decided, they're using the instrument called, cutting production. So they're cutting production, creating anxiety in the market, a lot of tension in the market, and market is extremely sensitive to what, for instance, big producers like Saudi Arabia or Russia or Kuwait and Iraq, they do. And here, markets kind of senses that they want the prices up, and therefore the prices are going up. Now, this is a situation which has created a big problem, big challenge for economies like ours and also economies like China and, in fact, the global economy. And even for developed economies like the United States, whenever oil prices are high, economies even like the US, faces major challenge, or economy like ours even more, because our dependence on crude oil is very, very, very high. And at the same time, the fact of the matter is ours is still an oil economy, despite massive investments in solar and renewables and other sources of energy. But the fact remains we are still an oil economy.